Alrighty, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely check out the website at cubicleinvesting.com. All right, so today is Friday. It's November the 1st. So in my previous video, I mentioned some of the things that I actually look at before I look to put on an SPX 0 DTE options trade. And one of the things that I mentioned was this website here, called forexfactory.com /calendar. And I mentioned this website because this is the website that I use to stay informed about what news items are on the horizon for release that could actually impact how the SPX moves. And one of the things I failed to mention, or I forgot to mention, was that, so for example, today, these news items were released at 8:30 a.m. Eastern time. So particularly the most important one here is the unemployment rate, right? And so you can come in here, a few minutes before 8:30 a.m. and actually watch a countdown to the news item being reported. And so as you can see here, we have roughly 30 seconds left. So I recorded this early on, just to give you guys a demonstration of how you can come in here a few minutes and watch the countdown to the news items actually being reported. So we have 16 seconds here. And what I like to do after the news items are reported, high impact news is reported, I like to go to the futures contracts to see how the futures market actually reacts to the news. So as you can see here, so it's pending, it's pending, it's pending. So now you'll see the news items start to be released. The information will start to come out. As you can see there, we got the non-farm employment change. We got the average hourly earnings month over month. And eventually we'll get the unemployment rate. So the unemployment rate is actually, so the forecast was 4.1%, and the actual now is 4.1%. So what I like to do is I like to go to the futures market, and I recorded this again. I recorded this earlier just to see how the market reacts. The futures market reacts to the reported news. So as you can see here, we have the E-mini for the S&P 500, also the Russell 2000. Also the E-mini futures contract for the Dow and also for NASDAQ. And so as you can see here, the ES-mini for the S&P 500 is actually reacting favorably to the news being reported. So as you can see here, the futures market is going up for the E-mini S&P 500 futures contract. And so that means that if the futures contract or the futures market is up, then when the actual cash market opens at 9:30 a.m. Eastern time, then you're going to see the S&P 500 as well as the other indexes or indices, the Russell, the Dow, and also the NASDAQ. You're going to see those up as well when the cash market opens. So I'm going to stop this video here. I'm going to come back when the market opens to kind of give you guys some commentary on what I look for when I trade the Russell 2000, which I think. All right, guys, so I'm back. So the cash market is open. It's 9:35 a.m. Market just opened 5 minutes ago. So we can see here the SPX is up roughly 33 points. We can see that the Russell 2000 is up 18 points. And we can see that the NASDAQ is up 82 points. So we're going back to the Russell. So we can see here right now. So I use the RSI and also the Bollinger Bands to give me context as to what the price action is doing. And so I use 70-30 on the RSI. So over 70, this red line here would be considered overbought. And under this red line here would be oversold. And so some folks use 80-20. I use 70-30. It works for me. Whatever your preference is, that's fine. Some folks may not even use the RSI, and that's fine as well. But yeah, so the first thing that I look at when I'm trading the RSI, because I like the RSI. A lot of folks don't pay attention to the RSI because it's not as heavily traded as the SPX. So I like to look at the market internals. So I use Charles Schwab's trading platform, Thinkorswim. It used to be TD Ameritrade, but now it's been subsumed by Charles Schwab. And so I use Thinkorswim because I have accounts in Tasty Trade as well as Charles Schwab. And so I like to look at the volume for the Russell, right? And then I look at the last 5 days. So here's October the 25th, 28, 9, 29, 30, 31, and today is November the 1st. And then I like to look at the amount of stocks that are increasing minus the number of stocks that are decreasing in the Russell 2000, right? So that's what the $ ADRLD conveys. And then I also look at the tick symbol, right? The tick is the it's measured in increments of 1 cent, right? And so anytime that there are more stocks that are ticking to the upside, you'll see the tick indicator actually turn green and go to the upside. But if you have more stocks that are ticking down, right, than are ticking up, then you'll have what you see here is you'll have red bars forming and it'll be going to the downside. And so that lets me know right now that we could potentially, see the Russell 2000 begin to decline in value as a result, even though, it popped initially, right? And so that initial pop was the result of the favorable news coming out about the unemployment rate, right? So the unemployment rate actually came out based on the forecast. So the actual is based on the forecast. But yeah, so I'm constantly watching the volume, the number of stocks that are increasing versus decreasing in the Russell 2000, and also the tick, right? And so just looking at, for example, if we look at what took place on October the 28th, we can see that volume was really strong that particular day, and the volume started out above this baseline here of 0, right? So anytime the volume starts out above the baseline, then that, to me, that conveys that we are potentially going to have an update for the Russell 2000. So as you can see here, right, November the 1st, the volume is already above that baseline of 0. And as a result, we can see that the Russell 2000 is up, right? And we can also see that looking at this baseline here for the number of stocks in the Russell 2000 that are increasing versus decreasing, we can see that there are more stocks in the Russell that are actually increasing versus decreasing. So we can see here, the number right now is 930, 940, right? So it's well above my baseline here. Now, of course, this can always change, right? This can always, begin to decline and go down, and then we'll see, consequently, we'll see the Russell 2000 go down as well. But right now, today is Friday. Oftentimes when the stock, starts out to the upside, and particularly when it becomes overbought on a Friday, and then you got, some major news items that are going to be released next week. So, for example, we have the election on Tuesday. The market does not like uncertainty, so we don't know who's going to win the election. And so I suspect that today, we're not going to see much movement from the Russell or the SPX, and we will probably begin to see some decline, right, as the trading session progresses towards 4:00 p.m. Eastern time. And so in a case like this, and you can see here the expected move from the Russell 2000, it declines very rapidly. So right now it's at plus or minus 12, and you'll see this expected move from the Russell decline rather rapidly. And so what I like to do oftentimes when you get a big pop like this, again, I will monitor the market internals, and when I begin to see the tick coming down, I'll try to get filled on the call side. I'll try to get filled on the call side and go try to get, a $25 or $30 credit, because if I'm looking at the market internals and reading them correctly, we should begin to see a pullback, right? If the tick begins to come down, and also if the other indicators as well, if the volume starts to decline, and also the advanced declining indicator for the Russell, if that starts to decline as well, starts to turn red, then you'll see the Russell start to decline as well. But right now it's still pretty strong, right? But if we go back to Tasty Trade, we can see that it's sort of hit a point of resistance, and it's kind of basing out, if you will. It's kind of moving to the side. It's kind of moving sideways. And oftentimes I like to wait until at least sometimes 10:30, 11 o'clock, just to get a really good feel for, how the Russell is going to move. And we also have a lot of orders that are looking to be filled within the first hour of the market opening. And so you can see some rather volatile movement from the underlying. The underlying in this case is the Russell 2000. All right. So, but nonetheless, I already have a position on that I actually put on yesterday for today's expiration. So we can see here, this is, definitely money in the bank. It's not going to reach 23.30, by 4 o'clock. So I have 10 contracts in this spread where I sold. My short strike is at 23.30. Long strike is at 23.35. And then I put on, I actually put this one on 2 days ago. I put this one on yesterday, just created a iron condor. And so I sold the 21.35, bought the 21.30, same number of contracts. And so because both sides are symmetrical, doesn't require any more buying power. And so the credit that I got was $400. So as you can see here, I'm already at 400. And then I'm also in the SPX as well. But I want to focus on the Russell 2000, because again, the Russell 2000, let's just look at the SPX real quick. So the SPX, if you look at its expected move, it stays relatively broad for quite some time, right? But again, I look for the 20-point move for the SPX. But with the Russell, I'm just looking at the price action. I'm just looking at the price action, particularly when it pops. I'm just looking for it to pop and begin to decline. And I'm looking to go on the call side, right? And just, get out of the reach of its movement. We can see that, the expected move, it actually started out at 15. So now it's already down to 12, even though the market has only been open for, roughly 15 minutes. And so it really, the movement from the Russell is much slower than the SPX. The SPX can be, can move much quicker than the Russell 2000, which is the reason why I like to trade the Russell 2000, although you don't get a lot of open interest as you see here on the Russell 2000. But, I get filled pretty relatively quickly when I'm looking to place trades on the Russell, so again, I even think that, this here would be a good trade, taking in $23, but again, I like to wait. But as you can see here, it's beginning to pull back, right? Now, if we go back and look at the market internals, we can see that pullback corresponds to what's taking place in the volume, because you can see slightly that the volume, right, is beginning to turn red. You can see that the advanced decline indicators beginning to turn red as well. And then of course the tick is coming down. And so as a result, you're going to see the Russell 2000 begin to tick down as well. But again, you still want to be patient, right? Because, there are times where the Russell 2000 can stay overbought for a few hours. So right now is it's overbought. It's over that 30. It's over the 70 top line for the RSI, the relative strength index. But we also see that the Bollinger Band is beginning to contract, right? Showing that the movement of the RUT is beginning to stabilize. So that's when you see the Bollinger Bands coming together like that. That just means that the movement from whatever underlying you're looking at is beginning to stabilize. Now, of course, those Bollinger Bands could actually change within seconds, right? And after contracting, they could begin to expand again, showing that the volatility and the underlying that you're looking at, and we're looking at the Russell, could actually be expanding. But right now, everything is pointing to, the movement stabilizing. And again, we have the election taking place on Tuesday. So again, I don't expect, a lot of, movement from these indices. But as you can see here, the SPX is at 0.72%. And on average, it moves about 0.5% every day. So the other thing I noticed, the other thing that I know about the Russell 2000 from doing research is that I'm looking at this time period here, this 23-year time period, the range of movement, the high and low on any given trading session, 99% of the time was less than or equal to 50. So what do I mean by that? So every trading session, you have a high, you have a low, right? You have an opening price, you have a closing price, you have a high price, and you have a low price. So the range of movement I'm talking about is the high price, subtracting the low price from the high price. That gives you the range of movement. And so looking at that 23-year period, right, 99% of the time, the Russell's range of movement, high to low, on any given trading session was less than or equal to 50. Right. So anytime, so you can always come in here and let's just go to today. All right. So anytime you can always come in here and look at the high and look at the low. And so, if, according to the research that I just showed you guys, right, the low is 2202 right now. So if you add 50 to that, that's 2252. So in theory, if you get above 2252, then that's a high probability position to be in. But as you can see here, you're not going to get a relatively decent credit. And so, you want to use that as your reference, but begin to adjust, to make the necessary adjustments to get what I consider a decent credit. So right now, I would say 2245. 2250, putting your credit spread for a credit of $32 would be a decent credit. But again, we still have to be patient, right? Because the Russell 2000 is still running to the upside. All right, guys, I'm back for this last segment. I want to wrap this up. So it's approximately, we got, it is 2:25, right? So we got roughly an hour and a half before the market closes. So as you can see here, we look at the RUT. So the RUT has been dropping ever since this morning. And that makes sense, right? Because we have the election that's going to take place next week, and so we're going into the weekend, and so folks are looking to get flat. The range of movement thus far, and probably will be the range of movement. The high is 2227. The low is 2202. Right, so we're talking about a range of movement of 25, right, which falls in line with the research that I spoke about earlier. So I tried to get filled for, I tried to sell the 2280, buy the 2285, but as you can see here, and I just had this position on sitting out there ever since this morning. That's not going to get filled, so I'm just going to close that out. But I did actually added to my SPX position. So so this position expires today, right, which is worth $250, and I added another $250 credit position on the call side, which expires on Monday. And I put that on when the SPX was at around 57.51. So right here, as you can see, it's been dropping ever since. And again, that makes sense as well, because again, we are going into the weekend and we have the election that's going to take place on Tuesday. So the market again doesn't like uncertainty. And so Monday will probably be a quiet day. And Tuesday could potentially be volatile. So right now we're looking at a credit of 500 for my SPX positions. And of course, this expires here today, RUT $400. And this marathon position is kind of somewhat irrelevant, but it's profitable nonetheless for a small amount. So yeah, so hopefully you guys have learned something. Again, please like the video, subscribe to the channel if you haven't already. I'm trying to reach 1,000 subscribers by the end of this year, or as close to it as possible. So, you know, this information is relevant. You know, like, subscribe, and also share the video out to other folks who might be interested in learning how to trade options.